Good morning and welcome to today's live stream. My name is Russell Shaw. I'm a Senior Market Specialist at FXCM. And today, instead of doing a morning market review, which we will resume on Monday, we'll just take a look at gold and specifically a momentum analysis around gold. I don't expect this live stream to take very long, but I think it's going to be very interesting. And just before we get into the momentum analysis, let's go ahead and just bring up the disclaimers. I'd like you to take a read through our disclaimers. I'll keep this on screen for a few moments. And what I'll do is I'll bring up, after the high risk investment warning, I'm going to bring up our market commentary disclaimer. So just bear that in mind. I'll just keep this on screen for about another 5 seconds. Okay, thank you very much for that. Let's just bring up our market commentaries disclaimer. And again, if you can have a read through that, and I'll keep it on screen for a few seconds. Just another 3 seconds. Okay, excellent. Thank you very much for that. Now, let's go ahead and let's bring up our gold chart. And this is the weekly chart of gold. What we have here is two exponential moving averages. We've got the 5-week and the 10-week, and then we've got a stochastic here. It's actually a %K, and I'll just show you the inputs. It's 1555. Okay, but because it's a %K, right, just 15.5 is fine. All right, so take a look at this. We've got the stochastic moving upwards in this northeasterly direction. Let's make this red. Okay, so you can see that the stochastic moving up towards the 70 area. And importantly, when we go to our longer term chart, let's go through to our monthly chart. Take a look at this. We actually are above. We're above 70. Okay, we're above 70. And if I have to put a label in here, we're at 85% of the %K. So when we're doing a momentum analysis, I want to specifically refer to what the stochastic is telling us. Okay, and to do that, I'm going to go through to Microsoft Paint, and we'll just do some work there, and then we'll come back to this chart over here. So just bear with me. I'm going to go ahead, bring up Microsoft Paint, and I'm just going to change over. All right, so this is Microsoft Paint, and what I want to show you is effectively a bar, okay, like a candlestick, except we'll make it a bar chart. And you can see we've got 4 points here. We've got our open. We've actually got our low over here. Okay, this is the high. I'm just using, let me put on caps. Okay, high, and here's the close. Okay, let's just make these caps. I just think it's easier to see. So let's go ahead. We'll put in the O for open, and we'll put in the low. Okay, now the next thing I'd like to point out is that we've got a range, and the range is between the high and the low, right? So we've got a range, and somewhere along the range is our close. Okay, I'm just going to leave it like that. That's good enough. Somewhere along the range, we've got our close. So if I put in a little close over here, okay, and I had to ask you, whereabouts are we with our close relative to the range? And you'll say, Russ, we're 50%. Okay, our close is, and I'll say, well, is that bullish or bearish? And you'll say, well, I don't know. We're kind of right in the middle, and I can't really tell. So I'll say to you, okay, what about this? What happens if we are trading pretty close to the low of the range? I'll say, is that bullish or bearish? And you'll go, well, that's got to be bearish. In terms of our momentum, we're getting pushed down to the low of the range. And I would agree with you. Similarly, if we were trading towards the top of the range, and I had to say, is that bullish or bearish? You'll say, well, we're trading at the top of the range. In terms of our momentum, that's a strong momentum. Okay, and the way that we can represent this mathematically is as follows. We can go the close, we can make it the close minus the low. Let's put that in brackets. Close minus the low divided by the range, okay, which would be the high minus the low. So what I'm saying is the closer that C, the closer C gets to H, the stronger the positive momentum to the upside. Okay, the stronger that C gets to, the closer that C gets to the L, the stronger the momentum to the downside. Well, that is exactly what stochastic is telling you. That is exactly what stochastic is telling you. So if I have to go back to our chart here, and if we take a look at stochastic, okay, we've got a range between 0 and 100. Okay, that's the range. Where is the close of gold trading relative to that range? Well, it's above 70%. It's 85%. We're right near the top of the range. That's exceptionally strong momentum. So the stochastic doesn't have an overbought or an oversold level. The formula is looking purely at a momentum play here. And you can see that we are nicely in what we call the upper quintile, the upper fifth of that range. And as long as we stay in the upper fifth of that range, the more bullish it's going to be for gold. And here we're looking on a monthly scale. We're looking at a long-term view. So you can see that we've got a really good momentum push here when it comes to gold. Now, there are some complexities. This is not 100% the mathematical construct of C minus L over H minus L. We've got a slowing factor here of 5 periods. We've just slowed it down. Okay, that is okay. That is okay. The idea here is that we're still getting a momentum reading relative to the range of where we're closing over a 15-month period. Well, we're 85% up. We're in the upper quintile. That is showing that gold has a very strong momentum push to the upside. Now, how will we know when that momentum push is starting to fade? Well, we would keep an eye on the stochastic, and if the stochastic drops out of the upper quintile or even drops out of the upper quartile and starts moving down, then the close is starting to show that it is going more towards the middle of the range. That's a slowing down. That's a slowdown of momentum. Okay, so I hope that's clear. What we've done here is we've used the range reading of stochastic to show the momentum, and we've got an extremely strong looking momentum on the primary trend of gold. It looks as if gold is well and truly supported by that momentum until proven otherwise. Okay, that's as far as we'll go for today. If you found this useful, please go ahead and click on that rocket ship, that boost button. Just helps me disseminate the live stream. Thank you very much for joining me today, and I look forward to speaking with you again on Monday. Have a terrific weekend. Thanks very much, guys.